Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look again on euro currency. So currently, events happen very fast, and mostly this is the subject for weekly report, but just in 2 words, probably you heard that recently Putin said that Russia intends to sell gas for rubles. And this is, at the first glance, it seems it's not very important, but in fact, this is very important. Just because to make Europe to pay in rubles, they will have to make 2 things. First of all, they have to ease the sanctions and to switch on the SWIFT again and free the reserves and accounts of the Russian Central Bank, just because they can't transfer the currency in the Russian system to buy the rubles, to pay for the gas. This is first moment. And second, they will have to join the Russian banking system to make the payments in rubles. If they will not do this, then European economy should collapse very fast, because as you understand, the gas, it's not just boiling the pots, but it's also the chemical sphere, agriculture, and actually it's really very wide appliance of this in the economy, different spheres. But that is mostly depends on the United States decision. So whether they will let European Union to ease the sanctions and to start paying in rubles, which, as you understand, potentially is a really bad thing to let Russia out from the dollar space. And this might be really very dangerous precedent for general global financial system. Because we heard here and there already from the Saudi Arabia, for instance, that they intend to sell crude oil in Chinese currency as well. So it's a very tricky moment. And whatever will happen, it might hurt the euro currency. This is first moment. Second moment, in the perspective of a few months, this could be a very difficult situation with the wheat harvest. So because the Russian wheat probably will be sent to the Ukraine, as it's time to seed right now already, and during the military operation it just can't be done in Ukraine right now, so it means that no wheat will be in this year from the Ukraine. And Russian wheat, the really big part of it probably will be spent to feed the Ukrainians. That in turn means that it will be a small amount for export, and I suspect that the same thing will be with the wheat export. It will be paid in rubles as well. And if gas it somehow could be replaced, but if European Union denied to buy the wheat, so it will be really problems just with the products, the food in European Union. So, but this happens probably a bit later, within 3-4 months. All this stuff make the really poor background for euro currency right now, and we probably should be ready for another downward acceleration. Maybe not this week, but in the nearest time that's probably could happen. So all the things makes me to stay aside from taking any long positions on euro currency by far. And even on the performance on yesterday and today, you could see that market is losing the bullish, short-term bullish context that was formed. Now is ready to drop more. So on follow time frame chart, you could see that grabber that we have mentioned starts to work. That's why we warned you. Maybe it makes sense to not take the long position by far. So here is market stopped somewhere in this area. But if we'll take a look at the performance on the intraday charts, on the hourly chart, you can see that there's really big chance that we should get swing to the 109.30 by a few reasons. First of all, as you can see, this ABC pattern has failed, or better to say not the failed, it actually has hit the OP target, but it has been erased. So this market has dropped below the C point, and this ABCD pattern is not valid anymore. Speaking on the possible deeper upward action, market also has failed to form another hand and shoulders pattern, so it was not able to reach the neckline and start dropping earlier, and it means that market is going to challenge the lows and break it. That makes us think that the butterfly might be formed here, and as you can see, 127 extension of this swing agrees with the OP target here. It's 109.38, 109.32. That will be the next support. So here, if you're a scalp trader, trade on the 5-minute chart, 15-minute chart, theoretically we could get here the bounce, something of that sort. Some respect here could happen, but something tells me that probably will be also the temporal pause, and market really, after some minor technical response on this level, could keep going lower. It's just because, recall, in the beginning of the week we said, and here was the strong confidence support, this was COP agreement, and we said if market will not be able to start upward action right from this level, what the chances that just single agreement with a single support will be strong enough to do this. So the fact that market is going to the next support area in general makes chances on the upward continuation based on this pattern weaker. So as we said, if market won't be able to start upward action from the first support, overall bullish background become weaker, and well, we will see what will happen around this level, but something tells me that this chance is really very significant that after minor pullback and response here we could get the downward continuation. It's just because of the fundamental background. But the situation with the, yes, just don't forget to say that situation with the payment for the gas and payment for wheat, it's important, but it's also secondary moment. It's geopolitical situations. You know that, as we warned you, through a lot of information right now, rumors that Eastern European countries have some vision, have some put an eye on western regions of the Ukraine, for example, Poland, Hungary as well, and they intend to use the current situation, military operation, to invade and take the control over the western regions. As you understand, it hardly will satisfy the Russia, and that is another Pandora box that could make the negative impact on the euro currency as well. Chances for that, somewhere in the middle of the April, stands really high. So these two factors, this problem for the payments for gas and other resources, and escalation of the geopolitical tensions, it's actually double impact on the euro currency right now, and that significantly increased risk that it will go lower, back to the lows first, and then to our 105, 104 target.